Hello and welcome to Startup Street. I'm Arundhati Ramnin, and with me as always are both Shruti Mishra and Ritu Singh. These are the top headlines from the startup world.
UDA, an augmented intelligence platform for corporate legal operations, secures $105 million in Series A funding round led by General Catalyst with participation from Floodgate and Sierra Ventures. The funds will be used to expand engineering centers in Bangalore, which will serve as a hub for AI innovation.
Malaki, a sustainable premium beverage brand, raises 5.7 crore rupees in seed funding round led by Venture Catalyst, along with strategic participation from Mark Ventures and Dada Chanji Family Office. This fresh infusion of capital will accelerate Malaki's expansion into new markets, strengthen its online presence, amplify its sustainability initiatives.
Verse Innovation, the parent firm of Daily Hunt and Josh, trims losses in FY24 at 815 crore rupees, a 57% decrease from the last financial year, according to TOFLA. The total revenue dropped by 17.5% to 1493 crore rupees in FY24 from 1809 crores in the previous year.
YouTube appoints former Zalora Group CEO Gunjan Soni as the new country managing director for the India market. His appointment follows the departure of former YouTube India managing director Ishan Chatterjee, who left the company last year to join JioStar.
Amazon's Prime Day may lose its sheen this year on the back of US tariffs that has caused many third-party merchants to either sit out this year or reduce the amount of discounted merchandise. This, as per Reuters, the planned pullback by the sellers is to protect profit margins.
IPO-bound Meesho receives board's approval to change its legal name in India from Fashioner Technologies Private Limited to Meesho Private Limited. As per regulatory filing, this move is to align with company's corporate and brand identity.
Well, those are the key headlines that we are tracking for you today. Now, B2B SaaS tech, or rather, the what's brewing today, what we have is Beyond Or Technologies, which is the parent of skill-based training and higher education platform Emversity, which has announced the close of a $5 million pre-Series A round that was led by Z47 and Lightspeed, with participation from Altiria Capital and Innowind Capital. Now, since its seed round from last year, the company has scaled to about 36 campuses across 18 states and says it is on track to end the current financial year with 75 plus campuses. So joining me now is Vivek Sinha, who's the founder and CEO of Emversity, to take us through how the company is going to deploy these funds for growth and more. Vivek, thanks very much for your time here on CNBC-TV18. Start by briefly taking us through what market gap you saw that you're solving for with Emversity, given your background with Unacademy as well, and the size of the opportunity that you try to capture.
Thank you for having me on the show, Ritu. So there's a paradox that we see in India as a country. On one hand, there is an acute shortage of skilled workers in nation building and critical sectors like healthcare, infrastructure, education, tourism. These sectors are growing at a very rapid pace, and they have not been able to add capacity because of lack of skilled workers. So every now and then you will hear a statement from the L&T chairman saying that they are not able to add more projects to their order book because they're not able to hire enough skilled workers. So that's one part of the paradox. And on the other hand, the unemployment among graduates in India is more than 30%. So one thing that we have in abundant in our country is raw material in terms of talent, right? So what Beyond Zord does is that we are trying to solve the skilled workforce shortage across 5 critical nation building sectors. We do it by running industry-aligned, work-integrated, skill-based higher education programs. We started last year with 9 campuses, and last year we were catering to the first industry vertical, which was healthcare. It's a massive sector which has been growing at about 20% CAGR in the last 15 years, very, very labor-intensive, and all organized and unorganized, all hospitals are facing severe labor crunch.
Got that, Vivek.
Yeah. When it comes to nurses, technicians.
Very briefly, You got that, Vivek. We have limited time, so very briefly, if you could tell us the business model, help us explain that, and also the kind of revenue and profits you're currently generating. At what pace is the business growing?
So we monetize the supply side of the marketplace, which means candidates who wants to pursue our skill-based program pay us a fee for the training that we provide to them. These candidates see value in our program in terms of leading these program leads to immediate employability. So that's our revenue model. We don't charge anything to the employer for whom we create these talent pipeline. So in short, that's how we monetize. In terms of our scale, today we are at about 36 locations. Each location does about, at steady state, each location will do about 300 students, and each student pays somewhere about 5 to 6 lakhs for our programs. These are long-term 2 to 3 year programs. So that's our revenue model, and that's our scale as of now.
All right. This $5 million that you've raised, what is the plan for deployment exactly?
So it will be used in 3 different areas. First, we are going to expand our campus footprint from 36 to 75 campuses. We are already, if I'm not wrong, the largest skill-based training player in the country in terms of our presence, but we want to further cement our position as the market leader. Second, we are going to launch about 3 sectors apart from healthcare and hospitality in the coming 18 to 24 months. So some part of the fundraise will be committed for that endeavor. And third, we are also going to invest heavily in our virtual reality-based learning modules, because that's our USP, that's the secret sauce which leads to better outcomes. So these are the 3 areas where the fund usage will happen.
I see. Getting to the 75 plus campuses by the end of the fiscal, Vivek, that you're talking about, what will enable this kind of an expansion? And over the medium term, what kind of presence are you looking at in India and also abroad, if that's something that's on your radar?
Yeah, these are ambitious plans. Honestly, we have grown from 0 to 36 campuses in flat 12 months. It's not easy. It requires a lot of operational excellence, and because these are physical campuses, large scale distributed operations, and that's requires operating chops. So we have a very seasoned teams of professionals from both edtech as well as other industries that is going to deliver it. Of course, it requires support from our financial sponsors, which we have just received in form of the second fundraise. Third, it requires a lot of focus on standardization and value delivery so that my proposition doesn't break at such a large scale. So we are focusing on all these 3 areas to make sure that we not only meet our expansion goals, but we also don't dilute the quality in that process.
All right. Very briefly, you said you have ambitions, but currently, do you have plans on the table looking to expand outside of Indian borders?
See, like India, every other, especially if you look at Europe or the developed nation, that society is breaking because of lack of skilled worker. The median age in European countries is 40, 45 years. They are facing a much bigger problem compared to India when it comes to lack of healthcare workers or caregivers. And they don't have the raw material like us. They don't have the demographic dividend like us. So of course we have plans, but we don't want to run ahead of ourselves. This market is supply constrained. So the dominant player in this market will be the player which owns supply. And that is what we are doing. We want to own the talent supply. I don't think this market can be won by demand aggregating or just by building a thin layer of technology platform. That's a very low moat. So yeah, there's a tremendous opportunity if we are able to stitch the international demand piece, but we first want to start by owning the supply from India and then eventually stitch the international demand part.
Vivek, finally, I know you spoke about VR earlier in our chat, but beyond traditional campuses, do you see Emversity really adopting a more hybrid, a more online or any other alternative format to widen this access to your training programs?
That's an interesting question. I'll explain this with an actual anecdote or an example. Imagine when a nurse treats a patient in a rare hospital scenario, the first time she performs a life-saving procedure like CPR is on an actual human, because all she has done in a typical college format is theoretical lectures. At Emversity, the same healthcare worker would have done that life-saving procedures tens of times on a high-fidelity simulator. So simulators which gives you real-time feedback on whether you are performing the procedure correctly or not, or whether you saved the patient or you lost the patient. So the difference between the training, it's not just for the sake of embellishment. The technology part and the virtual reality based simulation part in our programs is very, very real. The impact is 30x, I would say, compared to traditional teaching.
All right, Vivek, we wish you the best with that. And we're going to have to wrap up on that note because that's all the time we had. But thank you very much for your time here on CNBC TV18.
Thank you so much, Ritu. Pleasure talking to you.
Moving on the hot seat today, drone manufacturing startup Garuda Aerospace has bagged 100 crore rupees in fresh funding from venture capitalists. With this fundraise, the firm is now valued at $250 million. With this big Series B boost, Garuda is set to turbocharge its manufacturing, fast-track cutting-edge defense drones and chase global expansion, strengthening its position as a key player in India's growing drone ecosystem. Joining us now to discuss this further is Agnishwar Jayaprakash, the founder and CEO of Garuda Aerospace. Agnishwar, thank you so much for taking time out and being here with us on Startup Street. Congratulations on raising these funds. But how will the 100 crore rupees Series B funding accelerate Garuda Aerospace's expansion and innovation plans? How are you planning on spending the money that you've, raised?
Thank you so much for having me on. I think it is a phenomenal validation for Garuda Aerospace having bagged the 100 crores in terms of our Series B fundraise. It has been a phenomenal story over the last 4 to 5 years. I think major credit goes to the government in terms of the progressive government initiatives that they have brought in that has really enabled the entire sector to grow, not just Garuda Aerospace. We have manufactured and sold over 3,000 drones thus far. We have one of the most significant track records in terms of having served over 400 clients, almost a million flight hours. This really stands testament to the high utilization ratio, especially in the segments that we are in, which is precision agricultural drones, which has seen tremendous amount of adoption into the space. So what we intend to do with this fundraise is to focus a lot more on product development, because most times the common misconception about drones is that it is only used either as a photography or a videography tool in marriages, events and sporting events, or the other end of the spectrum in terms of the defense segment. But we have figured out ways and means how to utilize drones in disruptive and multi-billion-dollar segments like precision agriculture, Industry 4.0, mining, mapping, several other structural damage inspection and Industry 4.0 applications that increase efficiency and reduce expenses for our clients. That is the reason like major clients have started using drones. And I think we're just going to push the boundaries in terms of enhancing our products, ensuring that our tech stack is far more superior and also global expansion opportunities.
Absolutely. And speaking of clients, you serve over 700 clients, right? You just told us the kind of impact you've created for them. But if you could talk to us a little bit about the sectors that you're focused on and how is Garuda strengthening relationships with major clients like Tata, HUL, Reliance and other, government agencies?
I mean, our focus has always been the precision agricultural drone segment because we were first movers in the space. Honorable Prime Minister had launched 100 of our drones in 100 locations in 2022, post which Mahendra Singh Dhoni became a brand ambassador as well as an investor. And what we're what we're identifying and what we're addressing is the fundamental need for every single farmer in our country to save and protect his crop. Before, it used to be done by a backpack sprayer. And it was very, very, I would say, ineffective and resulted in a lot of crop loss. And that is the reason why precision agricultural drones have played a significant role in terms of reducing crop loss by over 26%, also saving per acre cost by upwards of 100 to 125 rupees for the farmer, which is why they're shifting and switching to drone-based spraying of pesticides and fertilizers. But beyond that, I believe where after the COVID pandemic, there has been a forcible adoption of drones. The reason why we've amassed over 700 clients, including the Tatas, the Godrejas, the Adanis, Reliance, plenty of other industries, is because they realize that there are far more effective ways to utilize drones by adding them and with payloads like probes, sensors, magnetometers, high-powered lasers, different types of sprayers. So we have enabled these drones to be supercomputer on wings, not just merely data capturing tools. A lot of AI and ML-based analytics goes onto the drones, making it a lot more intelligent. And we have managed to make sure that these drones are creating a lot more impact on ground.
Absolutely. So creating a huge impact there on ground, you're seeing it improve, especially for agriculture and stuff like that. But you saw your, coming to the numbers, you saw your profits surging nearly 3 times last fiscal, despite a 2-fold increase in your expenses. If you could take us through how you plan to bring your expenses down and what's the target for this year and what's been driving the most demand for you?
I think Garuda Aerospace has had an amazing 4-year run. From 2021, we closed at about 2 odd crores. 21-22 we're at 15 crores, 22-23 we're at 47 crores, 23-24 we're at 109 crores, and this past year we're at 123 crores. This has been a story of relentlessness in terms of identifying different use cases in the drone sector, and also the sector actually being conducive to a lot of these deep tech introductions that we have done and innovations that has followed. It is not just us, the entire industry has grown. Over 400 startups have cropped up. Plenty of them have received funding. Several of them have even gone public. So the entire sector has seen tremendous amount of growth. With respect to Garuda, we have followed a very asset-light, recession-proof, and very focused on unit economics business model. And that is the reason why we have been profitable for the last 4 years. Despite the revenue growth, we have maintained our profitability. Our gross margins over between 30 to 33%, our EBITDA margins between 20 to 24%, and PAT margins are at 14 to 17%. The reason why we've been sustainable and profitable is because we don't hire and then fire. We don't go after the growth at all costs sort of business models. We are focused on fundamentally improving our product, ensuring that our technologies are beneficial, and it sees a sustainable adoption over a period of time. So because of these, very simple nuances that we have followed, and it has led to success. And I believe that this year, there is going to be tremendous adoption of drones across sectors that we are in, and we are also eyeing global expansion. So we're very positive towards reaching a very high turnover as well as profitability in this year.
So no hiring and firing, no growth at all costs, been profitable, and you're looking to, you're looking at global expansion. But before we get to your global expansion plans, if you could quickly tell us, when are you looking to list on the bourses? What's the plan on that front?
Anyone I go and speak to these days, this is the question that has always been asked in terms of when Garuda is going to list. I think that from a readiness perspective, we have been making all the right moves. I can't comment on the exact date and time, but of course, we've had several rounds of discussion with investment bankers. From a readiness perspective, restatements has commenced. We've also, indicated in terms of forming committees. We've got executive director of SEBI join as an independent director. So we're making all the right moves. But more importantly, I think fundamentally the business model, ensuring that we have revenues without having to make too much efforts, that has been the focus. So once we have a little bit of forecast in terms of consistent revenues coming in and big numbers coming in, I think we should make that final push and surge. But from a IPO readiness perspective, Garuda Aerospace is fully committed. We have been doing a lot to make sure that, from being a startup to being IPO ready, there are plenty of things that you have to unlearn and then learn as well, which quite frankly has been an amazing learning experience for me as a founder. And at the same time, it has also been a huge transformational experience for our team members as well. It's no more garage oriented startup plans. It's more about how to dress up in suits and be very presentable in terms of your numbers and your business plans and your forecasting, because a lot of accountability and fiduciary responsibility to our investors will be of primary importance.
Absolutely. So lots of big plans there, but Agnisha, we're completely out of time. Thank you so much for taking time out and being here with us on Startup Street.
Thank you so much, ma'am.
Well, on that note, it's time for us to head into a short break. But coming up, we put the spotlight on Prime Securities, which aims to bridge the gap between startups and the big leagues. The company is also set to showcase 25 startups in Mumbai through its flagship initiative, Springboard. Stay tuned for more. Welcome back to Startup Street. On the hot seat today, we put the spotlight on Prime Securities, one of India's leading financial institutions that aims to bridge the gap between startups and the big leagues, helping Indian companies scale, raise capital and position themselves for IPOs or strategic M&As. One of Prime Securities' flagship initiatives, Springboard, is set to showcase 25 startups in Mumbai. And that's not all. Prime Securities is also launching Prime Trident Wealth, an innovative wealth management arm designed to help ultra HNIs and family offices through the future of wealth. To delve deeper into these groundbreaking initiatives, joining me now is N. Jayakumar, the Managing Director and Group CEO of Prime Securities. Jakes, welcome to Startup Street. First, tell us about Springboard, what inspired Prime Securities to launch this platform, and what can we expect from this year's showcase of 25 startups?
Well, thank you for having me over. The initiative that you're referring to, Springboard, essentially is to showcase about 25 startups, which I dare say in virtually stealth mode over a period of the last 4 years. We've been kind of nurturing, funding, helping them with key decisions in terms of change in business plans, etc. These are companies that we are extremely proud to say we are associated with. In fact, most cases, we have reinvested our own fees or the effort-based compensation back as equity in these companies. So we actually are walking the talk, or, in a sense, our skin is in the game in every sense of the word. So we are investors. We're also bankers. We're getting them IPO ready. And most importantly, we're extremely proud of the kind of steps that some of them have taken, from being what they were 3-4 years ago to today. So it's a huge step, and this is an opportunity to showcase these companies.
All right, Jakes, tell us, how does Springboard differentiate itself from other startup investment showcases or demo days that we see today? Are there particular sectors or themes that you believe investors should watch closely among the startups participating this year?
Not really. I think there is no particular sector that we are sort of focused on. We have sectors from consumer to edtech to clean tech to distribution to basic consumer in several senses, multiple companies in these areas. The idea here is, and where I think the differentiation comes in, is that we as Prime see ourselves as partners of these companies, not just raising equity capital. We raise equity, debt, and as I said, do a whole bunch of these things with these people. But most importantly, we are gearing up to actually get them M&A stroke consolidation stroke IPO ready over the next 2-3 years. I think that is the differentiation, where we've taken most of these people. By the time some of these things happen, we'd have an association of between 3 and 5 years, if not 7 to 8 years, with some of these companies.
Sure. All right. Jakes, you earlier spoke about preparing startups for IPOs and strategic M&As. What are some of the critical elements startups must get right early on to succeed at these significant milestones?
I think it's not just 1 or 2 steps. Everything from disclosure, proper accounts, having a CFO, having simple things, but simple things done correctly and done in a timely manner. Most importantly, good boards. We are in fact encouraging many of them to expand their boards. And the one thing about the startups, if you will, is that every one of the companies that we've got is actually funded by HNIs and family offices. Almost no institutional investor at this particular point in time is there, not because of any other reason other than the fact that we feel that patient capital in India comes from HNIs, individual investors and family offices. They are happy to go in for rights issues. They see ups and downs. They're not looking at down rounds and up rounds. The kind of constraints that institutions have are not the constraints that individual investors and family offices go through. They tend to be a lot more market driven, as in, as long as the secondary market is reasonably buoyant, money keeps coming in as part of a diversification strategy. But they are not, as I said, looking at every round should be an up round. They see things going up and down much the same way that life is. And that's what startups.
Sure. All right. Jakes, let me now talk to you about Prime Trident Wealth. What gap in the market are you aiming to fill with this new wealth management platform? And how is Trident Wealth positioned to serve the evolving needs of ultra HNIs and family offices?
I don't think there are too many wealth management firms that have been promoted by primarily investment banking firms. So the combination of investment banking, which means the ability to manufacture products, the ability for investment bankers to fill the needs of MSMEs and smaller, should I say, HNIs, is something which is not there in the market. People view wealth as third-party distribution and some manufactured products and an AUM approach. What we are seeing is the ability to use our IB skills, our IB ability to solve problems, the investment banking ability to solve problems as the way forward. If you go back to our own byline in Prime, ROI and RONW, ROI refers to return on intellectual property, and RONW is return on net worth, not net worth, which means essentially it's the ability to help businesses and individuals at the early stage. So this is going to be not just wealth in the sense of managing AUMs, but a lot more to do with an IB-driven approach to help companies, which then could become long-term partners for us in our wealth strategy.
Okay, very quickly, one final question, Jakes. With Prime Securities now straddling startup advisory, investment banking and wealth management, how do you envision the Prime Group shaping the future of India's entrepreneurial and wealth landscape? If you could quickly answer that.
Well, I just think we are part of it, and I think pretty humbled to be part of it. At the end of the day, we need to see ourselves as, go back to time where individual entrepreneurs did not get startup capital. Most of the capital raised by people were large business houses that had licenses that protected and made their moat. The first time individual entrepreneurs are coming forward with ideas, and we think to the extent that we can help some of them actualize some of this, we are seeing ourselves as very different in the investment banking approach, especially when dovetailed with early stage enterprises and wealth at a later stage.
All right. With that, I'll have to wrap up our conversation, Jakes. Many thanks for your time, and thank you so much for joining us on Startup Street.
Thank you.
All right. On that note, it's a wrap on this edition of Startup Street. More news and updates will continue on the other side, so stay tuned.